If you're a salaried employee, how should you go about doing it? To tell you, we have Vinay Singh. He's a chartered accountant by profession, and Vinay has been an old friend here at Smart Money. Vinay, it's good to see you on the show.
My pleasure.
Now, yes. Vinay, looking at filing IT returns, at this point in time, how easy or difficult is it for a salaried employee to do that?
Well, it is pretty simple now that you have e-filing as well as an option. It simply means going to the department's website and registering yourself, and you could even download their software and fill up the return yourself, although I would not advise it.
You wouldn't advise it. Why is that?
Well, it is finally a technical thing to do, and there are so many changes that keep happening year after year that you might think that the salary is a simple thing.
Right.
Yes, it is, but there are other things that you might do, which would create complications, and it's better always to consult a professional for that reason.
All right. So now what are these things that one has to be careful about? Because whether I'm doing it or whether I'm getting a chartered accountant like you to do it for me, there are certain things that I need to prepare for and certain things that I need to be wary about.
Absolutely.
So how do I start preparing for filing my tax returns?
Well, the first thing is that you should keep all your bank statements or your passbooks, as the case may be, with you as a record, which you can hand over to your consultant who is going to finally file your tax returns. Along with that, all the details of the deposits and withdrawals. You would also need your salary certificate. You would need certificates wherever tax has been deducted by someone, say on interest on fixed deposits or maybe on rental income. So all these things you must keep and keep a good record and just hand it over so that the person can prepare the return correctly and completely.
Right. And Form 16, of course, is very important for salaried employees, and you need to make sure that you get it from your employers.
Right, right. Without that, it will not be possible. One more interesting development that has happened in the last couple of years is that whoever has deducted tax from your income is available for you to view on the departmental website, provided you register.
Right.
It's Form 26AS. So once you register, you can simply take a look at what kind of people have deducted taxes on your various incomes, and you could even match it with the actual status. So you'll know that the other people have done things correctly or something has got left out.
Right. So Form 26AS.
Right.
Tell us exactly how do I look it up and get the details that you're telling us about how others have taxed me.
Yes, so you can go to the government website, which is Income Tax India, e-filing incometaxindia.gov.in, and you have to register yourself, which probably is a 5-10 minute process. Just fill up the details, and once you fill up the details, the website is open to you. You can go to my account and you will be able to see your Form 26AS right there.
Right.
So that would be really helpful for you to determine, even if something has slipped your mind, it will be right there available to you.
Right. And like you were saying, e-filing of tax returns has made it a lot simpler. Yes?
Right. Yes.
So one can just log on and be able to do that?
Yes. What you will need to do is download the software that the department has provided, and you'll have to fill up all your income details in that. And you can upload the return there itself on the departmental website. Once you do that, an acknowledgement is generated in ITR 5. That acknowledgement has to be signed by you and forwarded to the Central Processing Unit at Bangalore.
I see.
That is one method. The other is if you have your own digital certificate, you simply digitally sign it and off it goes. There's no need to do anything more.
All right.
So it's just that simple.
It sounds quite simple, but of course there will be plenty of questions about this. We'll take a small break and talk about the things that you need to be wary about when you're filing your tax returns. What are the things you should always bear in mind? Vinay Singh stays with us. You don't go away either. We'll be right back. Hello again, this is Smart Money. This evening you're with us on Bloomberg UTV and we're discussing how easy it is to be able to file your tax returns. Vinay Singh is with us, and that deadline of 31st July is looming over people's heads and they're worried about filing the tax returns. But I was just looking at the website here as well, and Vinay was telling me about that Form 26AS. Now all the details are very easy to access, as I'm understanding from here too. There must be certain things that you need to be wary about when you're filing your tax returns. What would those be?
Well, one of the basic mistakes that most salaried people make is that they don't, they just submit their salary certificate to somebody who ends up filing the return without considering even simple things like, say, your savings bank account interest, which is taxable.
Right.
And that usually, quite often, does not end up figuring in your return. There are other incomes as well. You're buying and selling shares, perhaps. You're buying and selling mutual funds. Even a switch from a mutual fund from one fund to the other is, after all, a sale or a transfer. So whether that leads to income or not has to be considered and offered to tax if necessary. There is rental income to be considered. Quite often you may be a partner in some firm or some family concern. So all these things tend to get missed out. And which is why you need to take a look at it, at all your entire statement, consider all your incomes, and then consult a professional so that he handles it regularly.
That's very important, and you keep repeating that. There are also certain deductions that you need to be careful about, right, Vinay?
Oh, yes.
Yeah, which are the most important ones, and the ones that we forget about?
ATC, largely everybody knows
Everyone
about.
covers.
Everyone's fairly,
yes, absolutely.
So, there is also Mediclaim available. There are deductions which are available in case you have dependents who have a specified disease or a disability, for example. If you spend money on that, there are deductions available for that. There are deductions available for interest that you may pay on higher educational loans for yourself or your dependents. So these are the typical deductions that one can claim. There is ATG for donations as well. So all these are things that you can claim, and perhaps you could review and see if you missed out something.
That's right. And if you do miss out on filing those tax returns, Vinay, very importantly, because many of us miss the deadline, how deep in trouble are we?
Well, if it's only salary income and your taxes, all your taxes have been deducted, really there is no impact if you miss the 31st July deadline. However, if you are claiming business losses or capital gains losses, which you are allowed to carry forward,
right,
and set it off against your income, those losses will not be allowed to you unless you file your returns in time. So you can just take a quick look. If there are no losses, then you're safe. There won't be any tax impact or no penalty, etc. However, if you do not file by, say, 31st March 2011,
right,
then there could be a penalty of 5,000 rupees, which is there on the statute books, but may or may not be levied.
Right. So that's in a nutshell, how you should be able to file your tax returns and the implications of not filing them as well. Vinay, it's always good to have you here on Smart Money. We hope to see you sometime soon again. And with that, we'll have to wrap it up.